day.
There's Apple's under pressure.
You buy stocks on Tuesday and sell them on Friday.
The market is as volatile as you'll ever see.
Traders saying this is the craziest day they have ever seen in these markets. Veteran traders saying they've never seen anything like it.
This video is sponsored by the award-winning Daily Market Movements trading platform. To open a live or demo account, simply visit dmmtradingplatform.com. Hello guys, it's Max here from Daily Market Movements. Welcome to another episode where today we're going to be analysing the S&P 500 futures chart. Just before I start today's video, anyone who's interested in joining my signal service and receiving my personal trades and updates, then please do not hesitate to visit my website dailymarketmovements.com. I charge a very small joining fee of $29.99. Let's have a look at the S&P 500. S&P 500 is under pressure this morning, currently trading down 0.68%. This is pre-market. Of course, we still have a very long way, I think about 3.5 hours now until the US markets open. Markets coming under pressure, as we've heard from many of the major chip stocks like AMD and Nvidia, that the US government has actually sent a letter out on the 26th of August, basically demanding that they stop selling their top AI chips to China because they fear that China are using them for military purposes. So of course that's weighing down on the indices. We are approaching some key levels here though. 0.23 fib area we are now fastly approaching, which should offer some support. But look at the RSI as well, guys. We've gone from overbought to oversold in almost 2 weeks, which is a very fast, rapid decline. RSI currently down at 35, so we're only 5 basis points now away from hitting the oversold territory. On a proper chart quickly, this is what I'm anticipating to happen, because I've had a lot of people messaging me or commenting on my YouTube channel saying, Max, your approach is completely wrong with regards to dollar cost averaging. And truth is, I have to come out and say I couldn't disagree more. Let's bring up a chart of, a very similar chart pattern to what we're trading in right now. Of course, the black represents the current market state, and then in the red is what happened back in 1962, a very similar bear market that we witnessed, and of course with pretty much the same issues as well with regards to inflation. And we bottomed here, okay, and as you can see, back in 1962 we did start to form a bear market rally, just like we have done in the past couple of months, and we're now starting to overturn. And look what happened in 1962. We actually come back down, but we didn't go anywhere near the lows, and that's exactly what I'm anticipating for this time around. I do not believe that we will go down to the lows, but I think that we will retrace about half of the gain. So if we just quickly go and have a look, what's half of the gains, let's say. So from here, we were up around, let's say 20%, so around 10%. So that takes you pretty much to around about now, and that's where that 0.23 fib area is. So I am anticipating a bounce anytime now, and I think that, going into year end, we will see a very strong finish. And there's analysts out there like Tom Lee, for example, who have come out saying that they fully anticipate a very strong finish to the year. And it is possible, especially if inflation starts to fall off a cliff, which many investors out there do believe is possible as well. So I'm dollar cost averaging in here to take advantage of the potential of a very strong finish to the year. So dollar cost averaging in here. Why would I become extremely short during this period here, hoping that we just go down a few further percentage points? That's not very smart investing. I want to be taking full advantage of this downturn here. Yes, some of my positions will be in drawdown, but that's what dollar cost averaging is. And then of course, once the market flips and we trade back up towards the upside, that's when all of those dollar cost averaging positions are now in a significant amount of profit. And who's to say that we can't even go a little bit higher going into 2023? So that's where my head is at this moment in time with regard to the S&P 500. I see every single declining day as more value and a fantastic buying opportunity.
$500 million barrels per day.
There's Apple's under pressure.
You buy stocks on Tuesday and sell them on Friday.
The market is as volatile as you'll ever see.
Traders saying this is the craziest day they have ever seen in these markets. Veteran traders saying they've never seen anything like it.